The recent years have brought about the highest levels of inflation in the US since the 1980s. While there are many logical justifications that can explain this sharp rise of prices, one particular reason highlights the sheer extremes of a capitalistic economy. That reason is when companies get daringly excessive and use inflation as an excuse to raise their prices and therefore their profits. This phenomenon, nicknamed Greedflation, does not happen across the whole economy, but is certainly present in select industries like food, transport, and energy. In this video, we uncover what greedflation is, how it is even possible, and review some real examples with proof of how some companies and sectors have taken advantage of inflation to further line their corporate pockets. We will also determine when, if ever, greedflation will come to an end. Let's first have a look at inflation rates across the whole economy. In 2021, the US experienced a 7% increase in inflation, while 2022 followed suit with a 6.5% increase in overall prices. Those figures mark the first time that America's inflation rate rose above 6% since the early 1980s. Some industries also got hit harder than others. From 2021 to 2022, food prices rose 10.4%, while energy prices spiked 7.3% higher. Several subcategories like eggs, fuel oil, and butter even saw their prices rise 6 to 10 times higher than the average rate of inflation. Yes, it's true that some markets were affected more by the recent global supply chain disruptions. But are we really to believe that that was the entire reason why some products went up 20 to 60% in price, while the normal inflation rates are around just 6 to 7%? Why or how could that even happen? Enter greedflation. Greedflation is not an official economic term, but informally, it refers to the perceived practice of corporations that use inflation as an excuse to charge excessive, unreasonable prices. Essentially, it is companies who use the opportunity of inflation to increase prices even though their own production costs have not significantly changed. But how are they able to accomplish this? As always in an open economy, it comes down to market forces. We believe it is happening due to the increased market power of companies, which has continued to grow over time. After all, companies can only engage in price gouging if they have the market control to do so. In reality, this concept of greedflation reflects a bit of a monopoly or oligopoly type market, where a company or small handful of companies fully control their portion of the market and can name their price since there is no other competition. Research from the Federal Reserve also suggests that the US economy is at least 50% more consolidated today than it was in 2005. With fewer companies in the market, it is easy to see how a small group of dominant players can control their prices and thus create a situation where greedflation could occur. As we start to uncover some real-world examples of greedflation, it is useful to first learn what the present market situation looks like. The current profit margins of all US companies have reached a historically high level of 15.5% in 2022, according to the US Bureau of Economic Analysis. That's the highest figure since 1950. Let's dive into specific industries to see if we can identify greedflation at a more granular level. The top 5 biggest oil companies in the Western world combined to rake in $196 billion in profit in 2022. ExxonMobil even set a record for the most money earned in the history of the Western oil industry by amassing $56 billion in profit in 2022. That comes out to more than $6 million every hour. That is also about 140% more profit for them than just 1 year ago. Yet, the average cost of a barrel of crude oil only went up about 40% from 2021 to 2022. So, the total cost of the raw material that these big oil companies buy and sell only went up about 40%, but many of them saw their profits increase by 100% or more. It seems that oil companies have used both inflation and global conflicts to justify their higher prices, which has more than compensated for their own rise in input costs. Another example of where greedflation has become apparent is the food industry. Recently, everybody in the food business has been blaming each other for the sharp increase in food prices. Restaurants have claimed that their food suppliers have raised their prices, so it forces them to increase the price on the menu so that they can maintain their own margin levels. At the same time, food suppliers have said that their cost for raw materials to create food products has gone up as well. Meanwhile, farmers have blamed the rise of their own input costs, such as animal feed and crop fertilizer, for the reason why their prices are inflated when they sell wholesale crops to the producers. But that doesn't quite explain how some products have outpaced the total average inflation rate by as much as tenfold. There was a telling quote in July of 2022 by the CEO of Tyson Foods, which produces about 1/5 of all the beef, chicken, and pork sold in the US. During an earnings call, their CEO stated that their price increases, quote, more than offset their own elevated costs for supplies and labor. That strongly implies that their price hikes were truly higher than the standard inflation rate. That allowed them to grow their first quarter profits in 2022 by 48% compared to the same period in 2021. A similar story has unfolded across the globe in supermarkets. In the US, Kroger's CEO stated that, quote, a little bit of inflation is always good in our business. Meanwhile, in the UK, the CEO of the popular chain Tesco said it was, quote, entirely possible that some of the brands on their shelves were unfairly profiteering from inflation. He went on to state that they have pushed back on these price increases to try to protect their customers. But if you look at prices of Tesco's own branded items, which they have full control over, these own label products went up 18% in price compared to just 12% for other brands. The same thing happened in Canada. The BBC found that grocers made 3.5% of profit in 2022, up from 2% in 2018, despite the increase in overall production costs. So, how is this all possible? We believe that it comes back down to market control. As we stated earlier, almost every industry has become more consolidated in the last 50 years. That means, instead of 100 independent brands of cereals competing against each other, there are just 4 or 5 conglomerates that produce the variety that you see on the shelves today. In turn, these large multinationals can run the market like an oligopoly and can control prices much easier than in a market with perfect competition. In fact, research has found that 85% of groceries available in the supermarket were controlled by 4 or fewer companies, and those companies held at least 40% of the market share for that product. Greedflation is even happening in industries that don't have much exposure to inflation. For instance, credit card companies are largely digital and don't really have any raw materials in their supply chain to worry about. Yet, in 2022, both Visa and MasterCard increased their transaction fees, even though there was virtually no change to their own costs. Visa's CEO was even brazen enough to proclaim that, quote, historically, inflation has been positive for us. This may sound like a never-ending cycle of greed that ultimately hurts the average consumer. But a free market will always find ways to correct itself in the long run. These elevated corporate profits probably won't remain this high forever. In the short run, the supply chain should come back into balance with demand. Firms could be charging more now to cover what they anticipate to be rising costs in the near future. In the mid to long run, wages should continue to rise due to a labor shortage as baby boomers retire and younger generations continue to be unwilling to work entry-level jobs for low pay. Additionally, excessive profits cannot be sustained in a capitalistic market due to competition. If one firm is charging too high of a price, another company can seize the opportunity to undercut them and still make a profit. But there are opposing arguments that believe greedflation is here to stay. If industries continue to become more concentrated, then our previous point about competition becomes diminished. There is also an issue related to the current levels of pricing. When inflation gets under control and there is even some deflation, you would expect prices to reverse, right? However, there is an economic theory known as sticky pricing that refers to price levels that are resistant to changes in market conditions, despite changes in the cost of producing the product. In other words, businesses are slow and even reluctant to adjust their prices, even if it is economically optimal to do so. Here is an example of this happening in the automotive market during the Great Recession that started in 2008. That year, inflation was still positive at almost 4%. Meanwhile, the price of a new 2008 Ford Mustang was priced at $19,650, which was a $400 increase from the previous year. But in 2009, inflation dropped by over 4% and entered deflationary territory. Still, Ford announced that the price of a new 2009 Mustang would rise by 4%. Finally, in 2010, inflation went up only 2%, yet a 2010 Mustang's base price rose again by 5%. During this time, nothing significant changed about the car itself. Yet, during times of deflation, its price actually went up. Despite the potential for greedflation to last forever, we are confident that the central banks around the world will be able to corral inflation. We are also sure that natural forces in a free market system will bring about the competition needed to cut into excessive profit-taking. Still, long-term consolidation remains a threat, not only to pricing, but to the overall competitiveness of the entire market. Nevertheless, our modern economy is one that is constantly evolving, so we do not expect what we see today to mirror the state of the world in even 5 years' time. Have you witnessed any greedflation on any of the products that you buy? Let us know in the comments below. Also, please consider subscribing to this channel to get the latest analysis on business topics that you won't learn from mass media. We appreciate your time and hope to see you again. Thanks for watching.